Danny from Wicked Cool Finance here. Is gold a good investment? Well, let's get right to it. In my opinion, I'm not a fan. I gotta tell you, I don't think gold is an absolute great investment. Not one of my favorites at all. There are so many different types of investments. There's real estate, there's stocks, there's bonds, mutual funds, exchange traded funds, better known as ETFs. But gold, not a fan. Why is that? Well, for one, gold is not as highly regulated as many of the other investments like stocks and bonds. But let's do a deeper dive into it and really get specific as to why, in my opinion, gold is not one of my favorites. There are three primary things that you're looking for when you're going to invest in anything. Number one is liquidity. When you think about liquidity as it relates to stocks, bonds, and mutual funds, they're highly liquid assets. You can easily purchase a stock or a mutual fund on E-Trade, Betterment, or Robinhood. Very, very simple. Or if you have a financial advisor, you can call your financial advisor and they'll do it for you. And you've got liquidity from 9:30 in the morning to 4 o'clock in the afternoon, 5 days a week, most weeks. Highly liquid assets. With gold, well, how do you buy and how do you sell gold? It's not very liquid. People talk about it as though it's liquid because you see a lot of commercials out there on the TV with different services that buy and sell gold, but it's not very liquid. You just can't go on E-Trade, Betterment, and Robinhood and buy gold. Nor can you call your financial advisor and easily buy gold. It's not a liquid asset, in my view, anyway. Now, the second thing you're looking for with an investment is safety. Is gold safe? Well, most people talk about gold as though it's very, very safe because it's a store of value. It's tangible. You can touch it. You can pick it up. You can put it in your pocket. Well, yes, it is a store of value, but how safe is it really? And that comes to the third question, or the third thing that you're looking for when it comes to investing in anything, and that is growth. Okay. Let's analyze gold over the years and see how much growth have we seen in the gold market. Yeah, gold has gone way, way up over the past 40 or 50 years, but there's been hiccups along the way and long hiccups along the way. Well, what makes gold typically go up? When do people buy gold? When do they want gold? People typically buy gold when we're in times of uncertainty, whether that be political uncertainty, military uncertainty. In times of uncertainty, people buy gold. People sell gold when things are going very, very well. When the economy's thriving and doing great and the stock market's going through the roof, you typically see a lot of selling in gold and gold falls. Well, let's look at history. On January the 1st, of 1980. We were in some very difficult economic times. We had extremely high oil prices. We had some of the highest taxes we've ever seen in the United States. And we had some military uncertainty as well. Well, on January the 1st of 1980, gold was trading for about $704 an ounce. Now, at the time, that was an extremely high price. I remember I was a kid in those days, and I remember my parents talking about, oh, gold's a great investment. It's really, really high right now. Well, that was January the 1st, again, of 1980, $704 an ounce. Well, after that, gold began to fall. Why? Because we had a change in the political posture in the United States. Taxes began to fall. Interest rates began to fall dramatically. And the economy began to do very, very, very well. Well, over about a 20-year time period, there were fluctuations in the price of gold, but it basically fell kind of steadily until about March the 1st of 2001, when we saw gold hit $257 an ounce. So in 1980, it was over $700 an ounce, and then in 2001, it was $247 an ounce. Is that safety? I'm not so sure. Well, why did it fall so much in 2001? Well, in 2001, what did we have? We had the technology boom. Things were going crazy. Stock market was going nuts. and stock market goes up, the gold market typically is inversely related, opposite, if you will. So gold went down to $257 an ounce. It didn't cross the $700 mark until September the 3rd of 2007. On September the 3rd of 2007, gold per ounce closed at $743. So think about it. If you bought gold in 1980 for $704 an ounce, you were at a loss for nearly 27 years. Is that safety? I don't think so. Well, yeah, today gold is trading at an all-time high, believe it or not, of $3,307 an ounce. All right, $3,307 an ounce. That's huge. Why? Well, we're in a period of economic uncertainty. Today, we've got Russia in the middle of a big war with Ukraine. We've got political uncertainty in the United States and a lot of questions about what the future will look like for all of us in the United States. So gold is going crazy. Well, should you buy gold today when it's at $3,307 per ounce approximately? I'm not so sure I would do that, because if it is a high, when things go up, they often tend to fall as well. Now, if you want to know how to track gold yourself, the stock symbol for gold is XAU =. So you can go on CNBC's website or Bloomberg's website or any of the trading sites like E-Trade and Robinhood, and you can put that symbol in XAU =, and you too can track the price of gold. Now, I've got several videos in the bottom of this channel. If you go down, you can look at my playlist and you'll see videos about the stock market and other things. Please take a look at those. And of course, I would really appreciate it if you like the video and subscribe to my channel. It's pretty cool. Thanks a bunch. Have a great day.